If you're looking for a highly educational market analysis, you're in the right place. This is the Transparent Effects Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. So without wasting any more time, let's jump straight to the charts. Okay, so this breakdown will be about gold. Now, why do I want to speak about gold? Because at the moment we do have quite interesting price action and structure. So what I will be doing is, as usual, providing a complete multi-time frame top-down analysis, starting from the higher time frames, then going down on the lower ones. We will also check what we have when it comes to the commitment of traders. So the COT data, which is what the non-commercials, so the biggest speculators in the market are doing. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for a potential move here on the pair. Now, starting from here, from the monthly time frame, what we can see is that the market just rejected this very strong level of previous monthly resistance here, which the market broke to the upside, retested here, and from which we wanted to see the market create a move to the upside. In fact, we did speak about gold when the market was here. I made a full breakdown explaining all the reasons for which we expected this move to the upside. And in fact, that is exactly what the market has now provided. Now, if you can't see this structure level clearly, you can use a quick trick, which is going down on the line chart. And here on the line chart, you can easily identify how the previous monthly close was exactly here, meaning that after the break above the previous monthly close, that previous level of resistance is turned support, which is exactly the zone that the market tested and rejected, as we can clearly see here by shifting back to candles. So here on the monthly, everything seems very bullish and we can expect more continuation to the upside. Going down on the weekly time frame, what we can see is that the market here has just printed a strong level of very strong level of previous weekly resistance, which is now turned support here. In fact, we can easily see that with this huge wick, which is obviously resistance, which now that the market has broken it to the upside, is turned support here. So what we expect is for the market to reject to the upside this previous weekly resistance turn support, possibly printing a weekly higher high. Now, in general, when you have an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how we have a perfect 0.618 Fibonacci retracement lining up exactly at this area that we do expect the market to test and then potentially to reject to the upside and for the market to print a new weekly higher high. So here, everything seems pretty bullish. Dropping down the daily time frame, what do we have? Now here on the daily, we can see how the market is currently creating this M pattern. Now, in general, after the creation of an M pattern, what you want to see is the market create a move to the upside to go and complete the pattern at the previous support turned resistance. So here on the daily, we want to see the market potentially provide a little bit more continuation to the downside, but then reject to the upside to complete the pattern at the neckline. Now, if we go and see what we have when it comes to the commitment of traders, which is basically what the non-commercials and the biggest speculators in the market are doing, and we check the data specifically for gold, we can see how lately we went from having 172.1k net positions all the way up to having 274.3k net positions, reaching 364.6k long positions and only 90k shorts. So gold at the moment is getting quite bullish. We can also see 10.4k longs added with the last report from an institutional perspective and 6.3k shorts getting closed. So gold at the moment is getting quite bullish. Therefore, how we could be approaching this potential longing opportunity with students. Now, as usual, we would be reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames. So 4-hour and lower. Therefore, with students, what we would be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we have right now to an intraday bullish market. And if the market will shift from an intraday bearish to a bullish market and provide to us one of our valid entries at that point, we could be looking for this potential long with a good risk to reward and good probabilities at that point for the move to the upside and for the market to complete this M pattern at the neckline, which is this previous support, turned resistance here on the daily time frame. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. You can also go and check out the mentorship program. The link is in the description. We are currently running a special promotion. And obviously in the mentorship program, first you learn all the rules of the strategies, then you also get a daily market breakdown every day showing you which pairs I'm looking for according to the rules of the strategies. And you also have the possibility to ask questions and get the answers every single day. So it's a very interesting program and complete program. The link is in the description. To find out more about the special promotion, go and check it out, and I will see you in it.